Hi everyone. You can see here on the charts today we ended up getting a slightly higher low and then rallying up to a little bit of resistance. But let's do a quick look at the charts as we head into the weekend.
Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started.
In news today, I think markets are a little bit concerned that we're seeing the 10-year yield get up and over that 4.5 range. The 5 range has historically been a pretty bad place for equities, and now we're seeing that 10-year yield rally pretty aggressively and a re-steepening in the yield curve. Is this enough to spook the White House off of their current plan? I would say probably not, but this is definitely something that we are seeing in markets right now. The dollar is falling, yields are going higher, and I think there's a lot of concern on what happens to equities and what happens to markets such as the mortgage market getting up over 7%. That's also not great for the potential growth of the economy. So keep in mind, yields are going higher, which is historically not great for equities. Moving over to fear and greed, we finished the week at a 13, a little bit of a step up from the 3 that we were at a week ago. So a little bit better there, but really not much. We did get a slight update. All of the indicators still in extreme fear, except for junk bonds, but they're still in fear. So again, historically, this is a good time to buy if we can see a slight improvement in fundamentals, which we haven't seen quite yet. Moving over to the economic calendar here just for a moment, you can see PPI, core and headline, coming in much lower than expectations. That's what we expected to happen after we got the really soft CPI data. 1-year inflation rates, 6.7% expectation versus that 5% previous. I think that's really aggressive, especially with the reads that we got here previously. 5-year inflation, 4.4%. Again, seems really aggressive, but that's what we're looking at. Consumer expectations way lower than expectations there, as well as consumer sentiment. So all of this kind of points to a weakening economy, which is concerning, but we still need this inflation to come in, which I think should help markets at least a little bit. Moving over to the charts here, just a real quick look at them as we head into the weekend. You can see we were up about 1.7%, got into that same zone, ended up holding the higher low that we kind of were looking for off of yesterday's charts. You can see we hit the 55, did kind of consolidate. We said we could get some sideways consolidation, which we still did early in the session, but then we got a nice little rally up. The key resistance right now, 535.72. You can see that is a bolded level for me, so I do look at that as a little bit of a stronger level. We kind of chopped on top of those less important levels, but 535.72, very important. And then you got the 200 as overhead resistance there as well, 537.55. So we're going to watch those levels in there. If it rejects from here, there's absolutely potential that we head back to these lows. Maybe this is a kind of a wider broadening pattern where you have a double bottom, but realistically, this is kind of a single bottoming pattern, more like a pattern on the daily chart here. So you could see that initial bottom kind of midpoint here. We come back, retest, and then get a stronger kind of push up here. Again, I'm not sure any of that's going to happen unless we get some kind of fundamental change, but on a technical basis, right now, we are still holding up off of yesterday's low. Moving over to the 4-hour chart, you can see we are still in bullish conditions. We held that kind of 8 EMA, 21 EMA zone in here. Continued back up to that 55 EMA on the 4-hour chart, which is your same overhead resistance that we talked about. 535.95 still acting as resistance. Basically no volume here today, but still technically bullish off of that 8 EMA. Moving over to the NASDAQ, you can see the NASDAQ is also a little bit bullish on the day, 1.8%, did get above some of these major trend lines, retested the trend here, bounced, got above these here. You still have VWAP as your overhead resistance at 455.56. Right now we're at 454.40, so just below VWAP there, but still above the 9 EMA. That's at 447.61, so we're kind of in between there, right on these major trend lines. Not a whole lot of movement today. You can see kind of consolidation low, did get a slight push to that 200 SMA on the hourly chart, rejecting from there a little bit in the after hours. If it rejects from there, then we need to see it push through this kind of low here, and then we could be looking for a low back towards these lows at that 411 area. But as long as it kind of holds this consolidation of EMAs, I have a key level there at 446.65. If it can hold that as a level and push, then we could be looking for this kind of 465 area in here, maybe even a little bit better. But if it becomes that kind of broader bottoming pattern, then you have to kind of watch that 411, 410 area back here as a potential zone of support again, and then get continuation. So we'll see. Still waiting to see if we can get some change on fundamentals. And then moving over here to the NASDAQ on the Tasty charts, you can see that 55 EMA sitting there at 453.43. We are above that, 454.40, getting above those levels, still holding that 8 EMA, still holding the 21. Structurally, again, I like this here. I think we can go a little bit higher, at least to that kind of 89 EMA zone. That would be 462.72. Maybe we can push into that area. Either way, on a technical basis, you can see still bullish, trailing stop down there at 417.02. Moving over to the Russell and the Dow, both of these had a similar day, up about 1.5% each. On a structural basis, the Russell still looks terrible. It's holding this trend structure in here, but still well below all the EMAs and SMAs, versus the Dow, which is sitting right on VWAP, just above the 8 EMA. Want to see it kind of push back into these zones here. The trend resistance is around 417.50 there for the Dow, so pretty decent potential for a move back into this consolidation range. The Russell really hasn't done much of anything, still chopping in this same zone, down 4.2% yesterday and then up 1.5%, but really in that same range that we were in yesterday. So sideways consolidation really for the Russell. The Dow did manage to close above the body of the candle from the previous day, so a little bit more bullish there. Momentum slightly bullish, RSI slightly bullish. Moving over to Apple and Microsoft, both of these having a really good day, up 4.06% and 1.86% respectively. On a structural basis, both of these look really, really good, right? So we're closing on the highs of the candle. We're almost back to the high from the Wednesday candle on both of these. Microsoft not quite there, but Apple very, very close. Apple seeing a nice move today. If it can get above here, maybe we could see it push back to this kind of zone of resistance in the kind of 223, 224 area. That would be interesting. Doesn't mean that I think we're going to get a change in structure. I really don't think that that's true, but in the short term, Apple does look like a pretty good trade, especially if we can get above that 199.54 level. I think we could see a nice little push back into these zones here. And then similar story here for Microsoft. Really need to see it get above 394.22. If it does, maybe we go back up and test 413 back in here, which could be pretty interesting. So structurally, big dip low, back into this consolidation. Want to see it push back into here. Moving over to Tesla and NVDA. Tesla was basically unchanged on the day, down just 9 cents. Really small ranging day for Tesla. Momentum still slightly bullish, still in the same consolidation range, still off of the lows here. As long as it can hold that kind of highly traded zone and start to push back above my next level of 264.68, that would be interesting, and then start to push back into these kind of consolidation of EMAs between 288 and kind of 313. That would be interesting. But for now, we're still stuck in this consolidation, waiting for some clear direction. Could go either way. And then looking at NVIDIA, nice day there, 3.12%, back to the 21 EMA. Realistically, I would only look for this to go back to this kind of trend line in here around 117. Also the level there, 116.70. So a little bit of potential upside. Overall, still very much a downtrend. Moving over to staples and discretionaries, you can see staples was up 1.26%. Discretionaries a little bit less than that at 1%. So still showing risk off market conditions. Discretionaries way worse on a technical basis, still well below most of the EMAs. I think we're right at that 9 EMA, but still below VWAP as well, versus the staples here. You can see we're kind of in the middle of this consolidation range. You can see the low, double bottom in here, high, lower high, but still kind of in this same trading range. So staples still holding up really, really well. We're back above the body of the candle from the Wednesday as well. So staples responding quite well here today. Moving over to 20 and 50-day breadth. Both of these showing quite a bit of strength here today. Big continuations. 50-day well above the body of those last two candles. So nice strong move there. This is what we expected. We did expect a little bit of bullishness off of yesterday's kind of dip low and bounce. So far so good on that. Looking for this to get back into the kind of 36 to 50 range on 20-day, and then we'll see if we break back down from there like we did the last time. And then 50-day, still want to see it get above the body here from 4 April, and then get back into this kind of 36 to 52 range. That would be interesting. And then once we get there, then I'm going to be a little bit more hesitant, right? The last couple times we've been in that range, we did get a very strong rejection, and I certainly think that's a possibility, even if we do make it back into that area. Moving over to the dollar continues to crater. Definitely not what you want to see here. Continues this kind of straight down price action, big selling here as well. So we took out this low. We're now at a lower low. The next support in here is around 96. So the dollar is weakening substantially, and we have yields going higher. Not a great environment for equities, but so far equities have held up really well, even with these two really big down days in a row for the dollar. And then moving over to bonds here, you can see JNK was actually slightly positive, about 0.25%. TLT pushing well below that 85.90 level, pushing right to that low here. Threw a wick to that and then ended up positive on the day of about 0.5%. So this is structurally still a pretty good support level. We'll see if we can bounce off this level and push back into the 90s. That would be nice, but we really need to see yields come down if we're going to see a little bit more strength across equities. Moving over to the VIX. The VIX did come down just a little bit, but still very elevated at a 37, very high there, well above all of these previous highs. We're still sitting right on this kind of support zone here. The level is 37.55, and we closed right on that level to the penny. So we're going to see if this zone holds or not, or if it's going to fall back kind of into this 28.50 area. That would be interesting. Structurally, this is bearish momentum, bearish RSI, so we should see this kind of come back in a little bit, which does fit with that overall short-term bullish thesis. And then moving over to my accounts here, I ended up making a couple of $100 on the day, which is good. Markets were up. I sold some puts. I didn't want to hold anything into the Monday session because who knows what's going to come out over the weekend. It seems like every other day there's some kind of fundamental change to the global economy at this point. So sitting out for right now. I did sell puts on the day. You can see my one trade. I traded in and out of one position, and I did make pretty much max profit on those puts because we did close on the high. So overall, still trading to the slightly bullish side, at least for now. Let me know down in the comment section what you think of inflation coming in so fast, much faster than we've seen over the last couple of months. What is that going to mean for markets? Does that mean a slowing economy? Or is inflation finally just dying on its own and the economy is going to be okay? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.